Hey gang, so it is October 11th. This week has been quite interesting. I don't know if anybody else has noticed this, but we have had a lot of like these crazy flush moves that have been happening in the market where it's just going bang, like back and forth. It's probably some algo trading. We've got some tweet action going on. It's been a pretty interesting news week back and forth as well. And this has led to some kind of dangerous moves for those that are day traders and end up on the wrong side of things. I'm going to show you guys an example here. Just happened to me a second ago. And we're going to take a look at the overall market here too. We need margaritas. Richard says, I need to get those algos perfected for my style of trading so I can just sit back and drink margaritas. There we go. Let me pull up what I've got going on here. I want to show you. Okay, so I'm going to show you. I'll show you. There's first so I was in gold. Okay, so on gold, what we had was this move down and kind of shifted momentum, came down, shifted momentum, and we were at good support levels. Here's one of the fib levels from the move on the way up, and what I was looking at was the shift in momentum that was happening here, and also the fact that the market was coming into nearing 100% extension on the bigger time frames. So you can see that here on the NQ. I also posted the, where did it go? The absolute high when it was hitting. We were watching it back in here. We're just coming up and touching it right there. So the market was starting to get so tight in here, you guys, that as that happens, we usually start to get things widening up and we'll start to get more movement coming in again. So all of this creeping up into that level told me, hey, you know what? We should be opening this up now and we should start to get more of the back and forth action. Sure enough, that is exactly what happened. And so I took that as an opportunity to look on the long side in gold, because gold was rounding off at some lows. We had decent support on the large time frames as well. And what I was looking for here is that on this retracement, when it was coming back up, the momentum was kind of a little bit slower still. So it didn't have like the really rapid kind of kickoff yet. In fact, this is 11:30. So the NASDAQ was actually just hitting highs right at that same time. But it didn't really react right away. The NASDAQ didn't react to that resistance right away. It held it, but it held it for like 10 minutes or more before it actually started to sell off. And so I used the 50% retracement of the way back. Here's our move down. So 50% there. Took some gains off. Didn't get added back in here. I thought about it, but it went a little bit too fast for me. I didn't quite catch it. And then we were coming up to some other fib resistance here. I was looking for a measured move on the rest to come back into the 76.4% retracement of this drop. So the first move here is the 50% retracement of the drop. This is the 61.8. This is the 76.4. So I originally didn't take it off when it came into the 61.8, even though there was some additional stuff there. I took it off when it bounced and retested though, because it flushed quickly off of it. And that can be a little bit of a clue that things could be starting to give us some trouble. And then I put I was in the process of putting my other order in. at this high coming into the 76.4 to get out of the rest, and bam, this is a 5-second time frame. So look at how quickly that went. Whoops. Try this again. Right here, look at that. So here, see how it flushed there? And then it kind of crept up a little bit more. So I took off more of the position at that 61.8%. You can see I had an order in at the 50%, so I got filled right at that exact pivot high. And that's what I usually aim to do. So that's what I was doing here as it was coming up into that 76.4. I actually was putting in an order for a tick underneath it. Thought, hey, you know, with that momentum, it should hit. And it did, but there wasn't many trades there and it just crashed. See my exclamation point. So this has been happening a lot all week. And I mean, the good thing is that for the most part, it's been happening in the direction that the technicals are already pointing towards. So it's already telling us, you know, which way it wants to do this. But if you're not fast enough, like here, whoops, then you can get into a lot of trouble. So big, huge rapid flush. The nice thing about these is that they generally will do a whip back, and a lot of times they can whip further than the original drop. I was not counting on that. I just put it a little bit under that. I was actually in the process of moving it to give it a little bit more room because it was coming back up so fast, but it filled me at my original bounce back order instead. So this has been like a trend all week. A little bit nauseating for day traders, not as big of a deal for swing traders and longer term traders, but definitely something that has been happening a lot for us day traders. Do I think the big boys and market makers are playing with day traders? I mean, I think they've kind of always done that to a degree, but I mean, they know where stops are. They know, you know, what people are looking for. They're looking at the fib levels and things like that. But you know, I mean, I don't think like they're like out to get us, so to speak. They're just trying to, you know, do their job the best they can do, just the same way we are. So I'm sure there are some cocky guys out there that like to mess around, but generally, you know, it's not something that they're really focused on. They're just really focusing on the main support and resistance levels and trying to do what we are. So they know what levels are going to push people out. Let's see here. Let's go look over at, you know, I think that that's been like an age-old question, like since the beginning of trading. What are the big guys doing? Of course, you know, they know where everything is, but I mean, look at the technicals on this stuff too, you guys. So here, like this is our high on the ES, and we essentially had a reversal pattern forming here anyway. We call this a tilted 2T. So your typical 2T, we'd actually talked about this in class here. Your typical 2T would look like this. You'd have like this slightly higher high over here. And basically we have that same idea, that same concept. And then the shift in momentum here. So there's your flush, your whip, but we were already changing momentum when that was going into there. And this zone, of course, was that 100% extension. So market makers know that. That's like a main thing that people are looking at. I think if they were truly out to get the traders, what would happen is that we would consistently see highs that go above that 100%. You know, that would always like flip that 100% out. And in reality, that's not as common. It can hold that exact 100% like within a tick or two. So I think that more of the algorithmic trading is based upon that, and that could actually be working against the market makers because they might be having a harder time doing some of those flushes because of so much of the algorithmic trading coming in. So I'm not as concerned about it. I don't think it's as big of a thing as we saw like 15 years ago, because I think the algos are kind of balancing out their games, I guess. At least that's what I've been observing, because like before, you would see 100% extensions, but we would get a lot more flushes at the 100% extensions. And at the fib levels, we would see those levels flush more than they do now. Now they hold so much better than they did 15, 20 years ago. I mean, they would hold at those levels, but you would see, like, if this is, for example, if this right here is your fib support, what we would see is that things would come down, they'd pull into it, they'd pull past it a little bit, and then they'd come back up. And now, so often we see it hold exactly, within like a couple of ticks. And that's more of an algo thing than a market maker thing. So I think that's where we're seeing the difference coming in these days. So we are still at that major resistance on the larger time frames. Here you can see it on the 15-minute chart. And you can even see kind of the main two moves up here. So we get this kind of rising pennant here. This is what we call a tilted phoenix or a tilted bull flag. It's kind of in the midway point there. And then we get the measured move here into the high, but it kind of shifted momentum at that little high there. It's kind of leading to this pullback here. We saw a really similar action yesterday too at the zone of highs here. We had our measured move. It kind of, stalled a little bit there, and then they did that extra push and turned over. So here's our main move, comes up, just that little extra push to get to that 100% and turn over. So support levels, we've got some in here, going to be here as well. A lot of times if this pulls into here pretty fast, we might get something like I talked about in class yesterday, where we could get a 2B, could get a little bit of a bounce here, kind of holds in the range up at this high a little bit better. So that's something that could happen here at this zone, but it doesn't need to. There's, chance that this can just still kind of keep selling off too, because the Nasdaq's actually more rounded on the 8,000 tick chart. It shifted momentum a little bit better into the 100% extension. I can even show you that here. You can see that shift right there. That's actually what allowed that to flush so fast too, coming down. And then that bounce that happened, what do we call that, you guys? Those of you that are in League of Traders, what do we call that bounce? In this case, it happened with news, but it's also a very typical thing to happen in the market as a whole. Yeah, it's our second chance. Here you can see the 2T action. This is 100% right here, right at that high, good flush down. So if you miss a short entry, then you can put your order on the books where that kind of choppiness starts there to get a second chance entry on the trade. So this was an extreme example of that happening, but it's something that we see over and over again, just usually on smaller time frames, where it will have a flush down, do the retest really fast. So it's the same thing, just much, much, much bigger scale here. We are at some support, as you guys can see. We're not quite at a 23.6% retracement. This is some earlier fib levels that are on here. Basically, let me show you what we are at right now. Let me clear these. Look at this bigger move here. So we're not quite back to the 23.6. That's going to be the main. Oh, I guess we are. Maybe. Hold on. It's not. Go up there. My fibs are being wonky. Yeah, it's not quite there. There we go. So that is going to be kind of the first main level of support. So it could shift and still pull back into that zone. Gold here has come up to some resistance. It kind of has a little bit of 2T action too on its 200 tick chart at this zone. Let's go back up, look at some of the larger time frames here, you guys. So larger time frames, clear these. There's not much that's changed since our outlook the last couple of weeks. I mean, basically everything that we've been looking at the last couple of weeks is pretty much the same here. On the NASDAQ, it's still trying to push up and has that potential for that third high. The way the momentum's kind of picked up here over the last 2 weeks, it's really trying to get there. Go down to the smaller time frame, you can kind of see getting into that measured move zone here on that smaller time frame, the 240-minute chart. So it has picked up momentum here, kind of have that inverse head and shoulders at that low, but it's still not enough to totally confirm that move to the upside, because anywhere in here, it can still keep shifting momentum. That's what we've seen, you know, at this high, it popped up nice and quick, then it shifted momentum. Here, dropped nice and quick, then it shifted momentum. So we still don't have that guarantee that it's going to try to go there, but it still has that potential to try to go there. So right now, it's just a matter of playing these smaller term moves. Right now, we are exhausted on the intraday chart. See the size of our impulse move? We only have one other example that was bigger, the drop over here over the last, basically since June. Most of them are closer to what we just have seen happening over the last week or so. So it's a pretty good exhaustion level, given that we also have 2 waves up within that exhaustion. It's also going to make it harder to totally keep pushing here without a bit more correction. We have a very, very news-driven market right now. Here you can see our 2T better on the 3-minute chart. So it's not uncommon over the weekend that we can see some craziness, kind of get things moving one way or the other. We got a lot of stuff going on with Turkey, impeachment potential. Oh my gosh, there's just so many things. Trade, China, basically, it's just a really crazy news environment right now. So, I mean, I don't know that Turkey is necessarily going to have too much of an impact on our markets, but it'll have like a residual impact. Just kind of see it trickle out into a number of different areas, I'm afraid. And that's a really, it's a really difficult topic for most people to even kind of wrap their heads around, with the Kurds and Syria and Turkey. That situation there is just confusing, you know, because we've got the Kurdish folks have been on our side fighting ISIS, and they've been like our biggest allies there to fight ISIS in the region. And yet the Kurds have faced a lot of oppression from the Turkish government. So that has led to lots of backlash on both sides. And unfortunately, some folks are way more extreme than others. So it's hard to say like who's the good guy and who's the bad guy in a situation like that. You go and you look at the statements coming out from even a number of different countries. And a lot of countries you would generally consider to be Western US allies. They've spoken up on behalf of Turkey, and then others have spoken up on behalf of the Kurds. So really tricky situation there. With the Turkish lira, for those of you that trade the Turkish lira, it's been a good market for trading because it's been very consistent as far as the patterns that are developing. So let me show you guys that here a second as well. It's one that I've been trading a lot. Obviously, I have an interest in what is going on over there because my husband is Turkish and he's actually half Kurdish as well. So get that. Some very interesting and lively discussions at family get-togethers. Let's just put it that way. So the Turkish lira has put a nice phoenix on the daily charts. We're going to get that pulled up here. Yeah, Richard, it's such a difficult decision. Rishi reminds us there's a public statement today at 2:45 Central with Trump and the Chinese VP. So that is going to be coming up 2:45. So that's about 15 minutes before the closing bell. Interesting timing there. Let me show you guys. I want to pull up a daily time frame. See how well the Turkish lira has been trading though? I mean, this is a 100-tick chart, you guys. And look at this gorgeous momentum reversal off of highs, the 2-way pullback. You got the nice 2B. League of Trader, folks, this is the exact pattern that I've taught you guys here this week during our session. You got the Phoenix with the continuation and resistance up here. But I want to show you the daily chart. That is really the one that we've got some cool action here for traders. So we have, again, that similar pattern with the sharp pullback off resistance, really strong pullback, and tries to go for really steep 2B here, but it's too steep. So it goes into the momentum reversal instead. Pull back up. Phoenix, little second chance entry here. And we're just still holding on this Phoenix. This is actually something I would generally anticipate this to keep going. So usually with this pattern, we will see this keep going. It doesn't necessarily have the same momentum. It can shift that momentum, but it will usually try to still hold and push up. And given what's going on right now over there, that wouldn't be surprising to see that. So I'm going to show you the weekly on here too, because it is in this huge symmetrical triangle. Oh, where'd my pen go? So you can easily see how this can come back up into that high. And a lot of times with symmetrical triangles, we'll see a false break one way and then a pullback the other way. I don't know that we'll necessarily see that in this case, but it should at least come up and do that false break to the upside, but I don't know that it's going to be totally false. So we'll have to see when it comes back up there. But I'm definitely expecting that to come and push through that upper channel on here. It could be enough that at that point we might get that shift to pull back down. We'll just have to see, because the overall movement on the way back up is a little bit slower than the way back down. So that is going to give that previous high stronger resistance. Now this could go into a bigger Phoenix like that on the weekly time frame too. Let's see here. So overall market, and again, same thing we've been looking at over the last couple weeks. Turkish lira. Let's go look at some of the other Forex pairs. pull these up on a couple of different charts here. And I'm going to look at bonds too. So let me get some of those markets open. Here, I'll show you the Russell here where those are pulling up. So the Russell's been interesting because it has been in this range on the daily time frame. It's gone kind of past where you would have an ideal Phoenix. I'll show it to you on the weekly. It's a little bit cleaner so you can see it a little bit better on that weekly chart. So you see how it's come up about 50%? So oftentimes this is going to try to break and head up to the upside. It's really at a do or die point. It needs to hold here in order for that to get going. So what we could see here, what would usually happen, the way this has unfolded so far, in order for that to go and break higher, what we would usually see is it come up here, it'd give a false break, pull back in, and then go. We saw that exact same thing happening yesterday on the S&P 500 on, I believe it was, what time frame was it on? 500 tick chart. Let's see if I've got an S&P 500 chart still open. I can go show that to you though. I will change this Russell one to the S&P 500 so you can see that comparison. So look at this here. I'll do kind of a screenshot of this and then I'm going to pull up the S&P 500. There goes the market crashing and gold is soaring. So we're still seeing that bigger move. It's not wanting to do a screenshot. Okay. Oh, there we go. We've got so much market action coming in here that it's kind of making things go crazy. It actually crashed the Ninja Trader on this computer. Doo-doom. Whoops. We just had a really rapid flush to the downside. Let's open that again. This is not my trading computer, thankfully. I might have a chart over here from yesterday on the S&Ps. Let's see. Waiting for that to pull back up. Maybe not. Trying to do too many things at once on this computer when the market is going waching. So let's see, this should be yesterday's. Time frame here. Nope, it's not showing yesterday's yet. All right, we'll give it a second. It was right in here. Let's see, smaller time frame. Here, you can see it on the 1 minute time frame. See how it popped up there? Kind of enough to break the channel, right? And then it flushed back into it and then took off. So that is something that is really common with a lot of these breakouts. So let me show you that Russell again. And I'll put this kind of on top of it here. So what would happen is that when it comes down from the lower end of the channel, and it has to come from the lower end of the channel to break the upper end of the channel, it often does it with like a little pop and then can flush back down and then take off. It doesn't always flush back down way to the bottom like it did here. Excuse me, had to get a drink there. But it can flush and then take off. And that's what I'm thinking has a really, really good shot of happening on the Russell, the way this is forming right now. So you guys can see how that would play out. So basically the corresponding moves are, this would be the first drop, pop, pop, second drop, pop, pop, pull back, pop to slightly higher high, pop to slightly higher high, pull back, breakout. So momentum is a little bit different on each of those moves, but you can see that they're pretty comparable. And so that's what I wanted to show you guys here. And then this nice, beautiful little pattern here, this is what we call a shallow avalanche. Leads to really strong selling. Ta-da! All right, let's go back to some of those other Forex pairs here before the market or my charting platform unceremoniously booted me. This is an example of the shallow avalanche here too as well. We've got a megaphone forming in the Russell on the 200 tick chart. Euro dollar 1 minute. That was a beautiful little pivot there. Here's the tilted 2T up here. Two-wave pullback. See how it kind of shifts momentum just like the overall market did at the high. Nice little pop there. Just a little 1 minute chart. We'll go up to some bigger time frames though. Daily time frame on the euro dollar is still struggling. I mean, we're getting these kind of slightly lower lows. It's leading to a little bit of a bounce. You can see a nice measured two-wave bounce here. So the euro dollar is actually at resistance here on the daily time frame, but it's rounding off in a way that this can develop into another bounce or continuation on the upside next week. Kind of goes against what we've been seeing on the weekly time frames because the weekly is still kind of pushing to try to get down lower. But by doing these constant shifts like this, it's not offering the confirmation on that breakdown. So usually by now, since you're down at that lower end of that channel, what we would see is that reaction off of this level would go more flat, that we would have a flatter move like this, less reaction off of that lower channel, and then the break for that measured move to the downside. And so far in October, it's not offering the confirmation yet for that. So kind of opening up the door to shift that bias to try to break higher again instead. And that's not what we've been seeing over the last couple of months. We've been seeing the bias focusing more on the downside. But just the last couple of weeks, the way this is shifting at that lower end of that channel puts the bears in a more precarious position. It opens the door that this can develop into a bigger bounce here. So we'll see that play out. Keep an eye on those smaller time frames, on the momentum on the daily chart for the guide, because it has the two waves down and then it went and did that slightly lower low. So that slightly lower low, that's the big drawback for the bears. Slightly lower low means that it can bounce easier. Without the slightly lower low, you're more likely to get a congestion that's going to go and offer the bigger confirmation for the tilted avalanche to keep it going lower. So that's what we've got going on the euro here. So some resistance as we head into next week, but potential to offer larger continuations. Aussie dollar, you can see is trying to round off here at support on the daily as well. Weekly here, it's not doing as much as the Aussie. It's still holding and basing at that low. So this can still base out farther and break down. So it is a little bit on the weaker side still than the Aussie or than the euro dollar. Usually it tends to trade primarily in the direction of the euro dollar, which is interesting. So can this shift here is the question. Kind of shift this momentum more compared to here. So usually this would try to go and do a measured move before it would bounce, but it's kind of shifting. It broke a little bit fast, shifting the momentum. That could get it to bounce up, but I wouldn't be surprised if this does try a lower low before that happens. Maybe something where here's our channel and it kind of goes and trades within that channel to a lower low and then tries to bounce. Get our bonds going and see, we can look at, let's look at the Canadian, the loonie here. By the way, the NASDAQ held the highs from, let's see, October 1st, when it fell down, it held the October 1st highs perfectly on that V pivot, on that rapid crazy flush. Okay, so bonds, we've been seeing pretty good exhaustion here coming up at the highs. You can see we got that shift in the momentum here at the lows with the megaphone, and nice two-wave measure move up, big flush down, and then we got the retest. So our retest, we're going to pull up a 240 minute. Give us more time. That retest is your second chance entry. See, it didn't take. Let's try this again. All these are smaller because I usually don't trade bonds over here. Here we go. Here's the 240. So that's our second chance entry on this. You can see we had a nice little bit of rounding off at that high. This could have gone for a little bit of a higher high here to get that measured move. So it actually stalled a little bit shy, but it had a good flush here. So it offered a second chance entry on the second chance entry, which came right into that congestion. So that second chance entry is the same thing that we saw happening intraday when the market just went off of that high earlier and then whipped back up. This is the same idea, same concept there. So this offers that additional short opportunity here. In this case, it was a little bit slower. We had the two-wave move. Usually what I'd be looking for is more of that measured move, but when it's slower, it won't necessarily totally retest that previous high. So as it gets close, about 76.4% extension, start watching for even smaller time frame reversals. In this case, you've got a bit of a 2T here, and then see that rapid flush there? That's the same thing again that we were seeing earlier in the overall market. Let me show you exactly how far that extension goes, right at 76.4. Had a feeling that's where it was. If it hadn't done that flush, then I kind of had more of a gradual base here, it would have had a better chance of going for that full 100% extension before it turned back over. So this can be a little bit trickier to catch because you can see there's not a larger reversal pattern really in here and doesn't quite hit that 100%. So it's a little bit more difficult to catch that type of setup. We were looking at possibility that this could go to a 2T on the bigger time frame, but because of how that formed on the 240 minute, that nullified that potential. So what we would have needed to have seen for that would have been basically two-wave move up, the correction, two-wave up, the 2T, and then the breakdown. So it basically did it on too small of a scale to get there on the larger time frame, on that larger daily time frame. So right now, going to be looking at this to try to hold into more of a range instead right now. Can have a slower start, but I don't really see another pattern on this yet. So this might still pull down another move and then go for a bigger 2T, which would mean like kind of pulling into here and then do a larger 2T like that. So that's probably the primary pattern that I'm going to watch for on bonds here as we go forward over the next couple of months. But I just don't see anything to give a fuller confirmation of a pattern yet. US Canadian dollar, or loonie, still kind of playing around, kind of trying to shift that momentum more for a breakdown on that weekly. $240 is quite messy. So this had that potential for a 2T too, and it did basically the same thing. This is a 240 minute of the US Canadian dollar. So if that had done like a nice measured move there, that would have been a really clear cut short. It fell short again, about 76.4% extension, and then shifted momentum here that turned it around. So again, the same tricky situation that the bonds had, we saw on the US Canadian dollar too. So it had the good flush, the nice shift in the momentum with your 2T here. So retest of this level is a good shorting opportunity, but it didn't do it with like a 2T. So a little bit trickier to catch the second shot on these. That weekly is still not the best. I wouldn't even be surprised if that tries to go out longer like that and then does more of a break. So you can see here some of the previous correction times. We do have some that are shorter, like this one is, but a lot of them are longer as well. So it would have the potential that if it doesn't go right here, that it could double out before it tries to go again in the new year. Dollar yen showing us a bit more upside on the weekly. Daily's not quite loaded yet. Weekly on dollar Swiss is just a mess. Close down some of my other charts since this is running so slow here. I've got screen capture and all kinds of stuff running in the background. So daily on the dollar yen, you got that inverse head and shoulders. So nice pattern for that, but the momentum is pretty strong on the downside. So this could even try to do another kind of inverse head and shoulders type of pattern in here. So this could pull back again in here before we get going, kind of give it more of that correction, and that could get it going faster. So here it might have a harder time sustaining that momentum. It would usually have a harder time sustaining that momentum, but if it pulls back again, that can get that momentum going again better. So that's what I would like to see here on the dollar yen, kind of do more of that additional inverse head and shoulders here. Even though the neckline is tilted to the upside, a little correction there would still help that with the bulls as we go into next week. And dollar Swiss here. I mean, you got a momentum reversal. Trend placement's not good. It's just sloppy. Here's a messy to be. Here's the momentum reversal. So my guess is this could pull back in here. It could even go for a momentum reversal plus, and that could turn things around a little bit better here and clean things up a little bit on the daily. I very rarely trade the dollar Swiss anymore. It's just too whippy and just doesn't have like great return compared to risk. Look at how this is trading here on the daily chart. And you can't say like the larger time frames are better because they're not. They're just as bad. The great thing about the dollar Swiss is it loves to move in twos. So you will find lots of situations where it gets great two-wave movements. But that's about it. Right at that 23.6. Check that out, you guys. I said watch for the 23.6. Right as we started session, that's exactly where it held. So since this is pulled up 50% here, this can still do that pull lower and go to like a slightly lower low and bounce. It still has that potential for that to happen here. Today, that's just one of the patterns that this can play out. It could also go for a retest of the highs, kind of do a double top up there, go into a longer trading range. That's also a possibility here. All right, you guys, I'm going to wrap this up here for today. So we will see you back here next week on Mentor Monday for those of you that are in League of Traders, and Friday for those of you that join us for Forward Focus. So I'm going to get this posted up here this afternoon for you guys. You can check it out on my YouTube channel. It's also at the very bottom of tonyhansen.com. So my webinar for the Dallas conference next week is going to be at 1:15 on Monday. And let me check that because I'm not sure. It might overlap with our Mentor Monday, so we might have to change the time there. I don't know if it's 1:15 Dallas or Eastern. Let me check that out, you guys. Hold on one second. Pretty sure it's Dallas time, Central Time. And I'll grab you guys the link too to sign up for that so you can view that too. So just give me one moment. Pause our recording here.